In this video, I'd like to talk a little bit about the first homework problem for this course. I want to give you just a little guidance on how I would, a strategy for trying to solve this problem that I think is also very helpful to reinforce the line items that are on the balance sheet. So this is a trial balance. These are the line item balances for a company. It's called Fantastic Corporation. This is its first year of operations, and the company produces its first virtual. It produces the first virtual widget. What's a widget? I don't know what a widget is, but anyhow, it produces the first virtual one. So as you see, we just have line items that have values. So if we scroll down to the bottom here, I have some instructions, right? The very first step is to try to identify the statement that the line item belongs to, and then the category of each line. I'll talk about category in a second. But there are only 5 places that a line item can fit. It's either an asset, a liability, it belongs to the owner or owner equity, it can be a revenue item, or it can be an expense item. So once we can identify these as what statement they belong to, the next thing we need to do is talk about category. And when I think about category here, I'm really talking about, are they short-term or long-term assets or liabilities? If it's an expense item, is it a cost of good item? Is it part of production, in other words? Is it an operating expense? Something other than producing the product that has to do with running the company. So that would be things like salaries and marketing expenses, research and development. Or is it some other kind of expense that we need to identify? Once we've identified those, we can move on to the second step. So let's go to the top of this line items here and talk about how we might do this. So here are the values. The first thing we need to do is talk about the where it belongs on the statements, right? So this is what accounts payable is a liability, accounts receivable is an asset. Now, accumulated depreciation is a little strange line item. It's what we refer to as a contra asset. In other words, it's an asset, but it works opposite. This is where we account for writing off the business assets over time. So that's part of the asset itself, part of plant and equipment. And of course, as we go down the list, you can see we just identify asset, liability, common stock is owners, cost of goods sold is expense, depreciation, expense. Down here we have revenue, right? So the next step is to then identify those in a little bit more detail. For balance sheet items, are they short-term, long-term, or owners? Accounts payable is short-term. Accounts receivable is short-term. Accumulated depreciation, since it's attached to machinery, is long-term. Now we have bonds payable. That's long-term debt. So as you can see, we identify the balance sheet items as short-term, long-term, or owner equity. And then we identify the production items, the income statement items, as either being part of production, that's P, OP for operations, and OT for other. And again, you can see we properly identify those as we go down the list. So now that we've identified these, now the job is actually quite simple. It's just a matter of transferring these items to the proper place on the statements. So let's go over and look at our income statement. Here we just put in, here are the sales. Again, $151,696. And they tell us that over this year, it cost us $64,250 to produce our virtual product. Now the line item below here is a formula. how you do formulas in Excel is you start with an equal sign. As you see, the formula is right here. What we want to do is you want to take sales minus gross profit. So if you hit the equal sign, then point to the cell. Take that cell and subtract that cell. And if you notice, they come up with different colors. Even on here, the cells are different colors, so you can identify the formula if you need to make correction. That's equals. Next thing down below, here are all of our operating expenses that we identified. Now again, if we need to add something here, right, we missed one, the easiest way, especially since I have this worksheet set up this way, the easiest way is to take the information we have, and I'm just going to do I'm going to cut this. Again, if you go up to home, if you're familiar, you go up here, you can cut, right? Cut. Just move it down one and then do paste. Just hit paste. It's going to get rid of some cells here. We don't need to merge things here. We don't need to worry about that. So then, whatever we have toys expense. We missed one. Then you can just add the number here. If you add it in the middle here, right, it's $250. You notice that starts to change all of our formulas. So again, I just want to show how you can add cells if you need to, right? And the best way I think to do it, and the only reason I did it this way is because I have another spreadsheet over here, or another, the balance sheet, and I didn't want to mess up the formatting of that. So I'm going to get rid of that. How you undo things is this little backwards little curvy thing here. So you just undo that, you just click it till it's all gone and everything's back in its place. Hit escape and we're good. So operating expenses, we need to know what operating income is. So you take gross profit and you subtract all of these things. Now I can point to each one, or what's better is I use a formula. And there's lots of formulas that are available in Excel. In this case, you just do equal, and the formula is sum. I want to sum things up. And if you notice, it tells you what to do here. Add all the numbers in a range of sales. So to do a range, you just do a comma, and you highlight those cells. Hit a comma to end it. You see the formula disappeared, and now hit equals. Here's our formula then for operating income. It's gross profit minus operating expenses, $66,000. Over here, we have a line item for interest revenue and interest expense. We don't have any interest revenue, so we'll just leave that blank. But the formula then for other income expenses, you take interest revenue, 0, minus $39.80, means we have a negative amount. This is interest expense of $39.80. The formula again, 66,000 minus, add that together, so it's 66 plus a negative number gives us 62,349. So that's the net income of our company for this year. Now, in your assignment, I think there's a little bit of an error that's made, maybe just miscommunication, but they don't tell you what to do with this net income. What does a company do with its net income? Only one of two things. It either keeps it and reinvests it in the company. We refer to that as retained earnings, or it pays it out to its ownership. So in this case, we don't have dividends payable. There's no dividends paid up here. You see, we didn't pay any dividends out. So there's no dividends payable. We also, since this is a startup company, retained earnings in the beginning is 0. So you take retained earnings in the beginning, 0 plus the net income, means the company has to decide what to do with this $62,349. Now, we've already said they don't pay any dividends, so this number is 0, which then means our retained earnings at the end of this year should total $62,349. Now I'll show you where this goes. I think this is the cleanest way to do this. So the next step, we have one more financial statement. Now we need to go up here and we enter our assets in here. So here's cash, accounts receivable. Now we could have a line item for a contra account here. This is our allowance for doubtful accounts. We don't have one. Here's inventory, place for prepaid expenses, our supplies. So our total current assets, $45,381. Machinery are listed $224,373. We found out that the accumulated depreciation is $110,020. So the total here, what we refer to this as net machinery and equipment, $114,353. If you had office equipment or other assets that we would be writing off, you could list them here. And then we just total. In this case, we want to total what we refer to as the net numbers. So net fixed assets is net machinery and equipment plus net depreciation in buildings. Oops, I'm sorry. This should be office equipment. I'm sorry. That line item's typed wrong. I'll fix that in a later version. We also need to know something. Are there any intangible assets? Intangible assets are things that you can't touch. Patents, trademarks, goodwill. All of those things are assets of the company, and we write them off over time. But in this case, we don't have any. So the total assets for this company is $159,734. So now let's go down and look at the bottom part of the balance sheet. This reflects the right-hand side of a T balance sheet. But we have what? We have short-term current assets. I won't go through the process. You just list them, add them up. Here's notes payable, bonds payable. So we have short-term liabilities. I'm sorry, this I copied this from somebody else, and I should have corrected that. That should be short-term liabilities. This is long-term liabilities. So now we have here the total liabilities, $47,385. Here's the common stock account. There is a potential line item for additional paid-in capital. We don't have that. And then here's retained earnings. And if you notice, retained earnings will equal this number over here. It's the ending amount of retained earnings that we calculated. So this company this year earned $62,349. We know they didn't distribute any of it. So they took all of that money, and that money has been reinvested in the company. So the total shareholder investment was the $50,000 in common stock that they've invested, but they've also reinvested their profits. So we end up with total liabilities and stockholder equity, $159,734. And of course, if you look up here, you also see that it's equal to $159,734. Total assets equals total liabilities plus owner equity. So that's how you can solve this problem. And I think this strategy will work quite well for you because I believe it's a little bit more structured. In the end, they also ask you to comment on the financial results. If you're looking at this financial statement, what information can you tell me that you see for this company? Now, we're just starting this class, so there's not a whole lot you can tell me, but hopefully you'll see that as we go through the class, we will start to understand how you read these statements and how you ultimately might make some decisions from those statements. So that is how you would solve the first homework problem for this course.